Warren Buffett hates gold. But what if he's wrong? He once called it a useless metal. No income.
Ow.
No growth. Just sits there. But gold has outperformed many stocks over the last 20 years. While markets crashed, gold climbed. So why is one of the world's richest investors ignoring it? And more importantly, should you listen to him or do the opposite? Stick around till the end, because I'll reveal how gold protects regular people when even billionaires lose billions. You don't want to miss this. Have you ever wondered, why does Warren Buffett hate gold so much? He's one of the richest people in the world. People call him the greatest investor of all time. And when he talks, millions listen. So when he said gold is useless, it just sits there and does nothing. Most people believed him. They stopped thinking. They stopped asking questions. And many walked away from gold. Forever. But here's something most people miss. Gold has beaten the stock market many times in the past 20 years. Yes, the very metal Warren Buffett said was dead has quietly made people rich, while others lost money in tech crashes, housing bubbles, and inflation storms. So the big question is this: is Warren Buffett actually wrong about gold? Or is there more to the story? Today we're going to break it all down in very simple words. No Wall Street jargon. No big theories. Just the truth. You'll see why Buffett may have made a mistake. Why gold still matters today, even more than ever. And if you stay till the end, I'll show you how much gold to buy, how to buy it safely, and why it could protect your money when everything else crashes. Let's begin with what Buffett actually believes. He says gold is a non-productive asset. It means it doesn't make anything. It doesn't create cash flow like a business. It doesn't pay rent like a house. It doesn't pay interest like a bond. To him, gold is just a shiny rock. You dig it from the ground. You lock it in a vault, and it just sits there. Sounds boring, right? Here's the problem. Buffett is only looking at one side of the coin. Yes, gold doesn't produce income. But that's not why people buy gold. People buy gold because it protects value. Gold doesn't crash when money loses its worth. It doesn't go to zero when banks fail. It doesn't depend on the success of a CEO or a company. Gold is safety. Think about it like this. Buffett is a master at picking great businesses. He believes in holding them for decades. But what if the system that supports those businesses starts to shake? What if inflation eats up your cash? What if the dollar weakens or the markets panic? This is where gold shines. It doesn't need to grow like a business. It only needs to stand strong when everything else falls. And that's exactly what it has done, again and again. In 2008, when the world was in a financial meltdown, gold went up. In 2020, when COVID crashed markets, gold hit all-time highs. And even now, in this uncertain world, gold keeps rising, slowly but surely. So maybe gold doesn't do anything, but maybe that's the whole point. It just sits there and protects you. That's not useless. It's priceless. Still think Buffett is 100%, right? Don't worry, we'll go deeper. In the next part, I'll show you how gold has actually performed against the stock market. We'll compare it to Buffett's own investments, and the results might shock you. But most of all, you'll learn when gold wins, when stocks lose, and how to use both smartly. So stay with me. What comes next will change how you see gold forever. So now you know Warren Buffett doesn't like gold. He prefers businesses. He says stocks are better than gold because they grow over time. But is that always true? Let's compare the two. Gold versus stocks. Not over a few months, but over decades. In the year 2000, the price of gold was around $275 per ounce. Today, it's over $2,300. That's more than an 800% gain in about 25 years. During the same time, the S&P 500, which is a big group of U.S. stocks, also went up. But here's what most people don't see. Gold did better than stocks during some of the worst crashes. Like in 2008, the stock market fell almost 50%. People lost jobs, homes were taken away, retirement accounts were wiped out. But gold, it went up. Again in 2020, COVID hit the world hard. Markets dropped fast. But gold, it climbed to new highs. And even now, while interest rates are high, inflation is hurting people, and economies are struggling. Gold keeps holding its ground. So the idea that gold is dead or useless isn't true. It may not pay you dividends. It may not grow like a tech company. But when things go wrong, gold protects your wealth. It's not about profit. It's about peace of mind. Now let's look at Buffett's favorite kind of investment: companies. Yes, many of his picks like Coca-Cola or Apple have done well. They pay dividends. They grow over time. But not all stocks are winners. Many companies go bankrupt. Many lose value. Some are full of risk. You only find out after your money is gone. But gold, it's not a company. It doesn't go bankrupt. It doesn't need a CEO. It doesn't depend on a business model. It just exists, like it has for thousands of years. That's what makes gold different. It's not a bet on growth. It's a bet on stability. You don't buy gold to get rich overnight. You buy it so you don't become poor when things collapse. Let's say you had $10,000 in 2000. If you bought gold and held it till now, it would be worth over $80,000. If you kept that money in cash, it would be worth much less, because inflation kills the value of money. Even some stocks didn't do that well. Many went up, but many also went down. With gold, the ups and downs are slow, but they're steady. So here's the truth. Buffett isn't wrong about stocks. It can be great for building wealth, but he underestimates gold. He sees it as a shiny rock. But smart people see it as a shield. Stocks are for attack. Gold is for defense. You need both. Buffett only plays offense, but the real winners, they play both sides. So next time you hear someone say gold is useless, ask them this: when the market crashes again, what will you be holding? The next section, we'll go deeper. We'll talk about why gold always survives, even when banks, currencies, and empires fall, and why gold has been money for over 5,000 years. Most paper money disappears in 50. Stay with me. The next part is powerful. Let's take a step back and ask a big question. Why has gold survived for over 5,000 years? Think about it. Empires have risen and fallen. Governments have changed. Currencies have come and gone. But gold? Gold has always stayed valuable. The Roman Empire used gold coins. Ancient Egypt used gold for wealth. Even kings and queens across Europe used gold to trade, store value, and show power. And now, in the modern world, when we have banks, apps, and digital money, gold is still here. Why? Because gold is real. It's physical. It's not made by man. It's not controlled by any government. You can't just print more gold the way you print dollars. That's what makes it special. When paper money loses value, gold holds its ground. When banks collapse, gold doesn't vanish. When war breaks out, people run to gold, not stocks or crypto. There's a reason countries like the US, China, and Germany keep gold in their central banks. Even Warren Buffett's own country, the US, stores over 8,000 tons of gold. If gold is useless, then why do the biggest powers in the world still stack it? Because deep down, they know gold is the final backup, the final plan when everything else fails. Let's look at some real events. In Venezuela, the currency became worthless. People couldn't even buy bread. But those who had gold, they could still trade, still survive. In Zimbabwe, hyperinflation destroyed savings. Money was printed like water, but gold kept its value. In Germany, after World War I, the German mark collapsed. A loaf of bread cost millions. But gold, even just a small coin, could buy food, shelter, safety. See the pattern? When paper dies, gold lives. It doesn't depend on belief. It doesn't depend on systems. Gold has value because it's rare, real, and trusted. That's why it's not about whether gold pays dividends. It's not about whether it grows like stocks. It's about this: gold protects your power to buy. That's what people miss. Even today, if your country's currency drops in value, gold goes up in price in your local money. It's like a seesaw. When one goes down, the other goes up. This is not magic. This is not a theory. It's history. That's why people in uncertain countries buy gold. That's why during wars or inflation, gold becomes the go-to asset. And that's why, no matter how much Warren Buffett disagrees, gold is not going away, because it's more than a metal. It's money that doesn't need permission. It works in every country. It works in every crisis. It works in every generation. So maybe Buffett doesn't care for gold, but that's okay. He's a billionaire. He has cash, businesses, power, but regular people, they need safety. They need something that survives. For thousands of years, gold has done just that. So in the next part, we'll talk about the hidden reasons why billionaires and banks are quietly buying more gold, even while telling you it's not worth it. You're about to see what most news channels will never say. Let's ask something strange. If gold is so useless, why are the richest people in the world secretly buying more of it? Why are big banks and powerful nations stockpiling gold while telling you to ignore it? There's something going on here. If you miss it, you could lose a lot. Let's start with central banks. In the last few years, countries like China, India, Turkey, and Russia have doubled down on gold. They're buying tons of it, literally, and they're not talking much about it. Why? Because they see what's coming. The global financial system is shaky. There's too much debt, too much money printing, too much fake confidence. When people lose faith in paper money, what do they run to? Gold. That's why governments want it. They know they'll need it if the dollar weakens or if trust disappears. But it's not just countries. Billionaires are getting in too. Ray Dalio, founder of the world's largest hedge fund, said he keeps gold to protect his wealth. Even Elon Musk, though focused on tech, has said fiat money is a scam. And believe it or not, even central banks in Europe, the same ones that promote the euro, are hoarding gold quietly. And here's the real twist. While they tell regular people like you and me to buy stocks, they're filling their own vaults with gold. Think about that. They're buying real assets. While telling us to keep gambling on the markets, they say gold doesn't pay interest. But they forget to say gold doesn't default either. They say gold doesn't grow, but they don't mention gold doesn't crash like stocks. That's the quiet game they play. Here's a fact you won't hear on TV. In 2022, global gold demand hit its highest level in over a decade, mostly driven by central banks. They're not doing this for fun. They're getting ready. Getting ready for what? A new system, a reset, a possible crisis. Call it what you want, but it's clear. Something is shifting, and gold is their safety net. So while Warren Buffett might laugh at gold, others are quietly preparing for the storm. Now ask yourself, if the people who print money, who control banks, who understand the system better than anyone, they are stacking gold, shouldn't you be paying attention to? This isn't about fear. It's about being smart. Gold isn't exciting. It doesn't make headlines. It doesn't go viral. It's real. It's steady. It's being bought up fast by the people who understand what's really happening. The question is, will you wait until it's too late? In the next part, we'll break down how much gold you should really own, and how regular people, not billionaires, can protect themselves using just a small portion of gold. Stay with me. This next section could literally save your savings. Let's be honest. Most people don't know how much gold they should own. Some think it's only for the rich. Others believe you have to buy bars and store them in vaults. But the truth is simple. You don't need to be rich to own gold. You just need a smart plan. Let's break it down. First, understand this. Gold is not meant to make you rich overnight. It's not a lottery ticket. It's a shield. It protects what you already have. So, how much gold should you own? Most financial experts, even the ones who love gold, say that 5% to 15% of your total savings should be in gold. Let's say you have $10,000 saved. That means $500 to $1,500 could go into gold. That's it. You're not putting everything into it. You're not betting your life on it. You're just protecting part of your money in case the system breaks. Think of it like insurance. You don't buy insurance hoping your house burns down. You buy it just in case. Gold is that safety net. It doesn't crash when the stock market crashes. It doesn't get hacked like crypto. It doesn't get frozen like your bank account could during a crisis. It's simple. It's quiet. But it works. Now here's the cool part. You don't need to buy big bars or keep gold under your mattress. Today, you can buy digital gold, gold ETFs, or even small coins in grams. Apps let you buy gold with just a few dollars. But you can start small, $10, $50, even $100. No need for storage or a safe. But you can also split your gold strategy, keep some digital, buy a small coin for home. Maybe invest in a gold fund through your bank. The point is, make gold part of your mix, not everything. It's just part. Let the rest of your money work in stocks, business, or real estate. Keep that gold slice for stability. Because when bad times come, and they always do, gold won't let you down. Now here's what many people don't understand. When you buy gold during calm times, it feels boring. But when a crisis hits and everyone is panicking, gold suddenly becomes golden. That's when prices shoot up. And that's when buyers rush in. And that's when you realize you're smart to prepare early. Even Warren Buffett in 2020 bought shares of a gold mining company, something he never used to do. Why? Because maybe, just maybe, even he sees the system shaking. So again, you don't need to go all in. You don't need to become a gold bug. But having some gold that's just smart gives you peace, it gives you options, it gives you power. When the world goes crazy, the next section will cover what could happen if the US dollar weakens and why gold may be the only thing left standing. This is where things get serious. Stick around. It's about to get real. Have you ever wondered what would happen if the US dollar lost its value? It sounds scary, right? But here's the thing. It's not just a fantasy. It has already happened in other countries, and signs are showing it could happen here too. Let's start with this. The dollar used to be backed by gold. Every dollar meant something real. It was like a promise. You could exchange it for gold any time. But in 1971, that changed. The US removed the gold backing. Since then, money is just paper, or numbers on a screen, nothing real behind it. That's when inflation began to rise. The cost of everything went up, slowly at first, and then faster. Now think about this. What gives a dollar value today? It's not gold, it's not silver. People believe the dollar has value, so they accept it. But what happens if that trust breaks? Let's look at history. In Venezuela, people woke up one day and their money was worthless. Bread cost millions. People had to carry bags of cash just to buy food. In Zimbabwe, the same thing happened. $1 trillion note couldn't even buy a loaf of bread. Now, I'm not saying this will happen to the US, but if the dollar weakens, even by a little, your savings lose power. $10,000 today won't buy the same tomorrow. Your salary may stay the same, but rent, gas, and food will get more expensive. That's where gold comes in. When paper money loses value, gold gains value. Because it's real, it's trusted. It's been around for 5,000 years. People across history in every country have turned to gold when things go wrong. Gold doesn't care about borders, doesn't care about governments, doesn't crash because of a tweet. Now, here's something interesting. Many countries are trying to move away from the dollar. China and Russia are trading without using dollars. BRICS nations are planning a new system. And some experts say we're entering a post-dollar world. If that happens, if the dollar is no longer the king, your money could lose power faster than you think. While everyone's busy watching the stock market, gold will quietly rise. This isn't fear. This is preparation. You work hard for your money. You save. You plan. But if the value of your money drops, all that effort disappears. Gold protects against that. It holds value, even when everything else doesn't. So ask yourself, would you rather keep 100% of your money in dollars that might lose value, or keep a small part in gold, something that never goes to zero? That's the choice smart people are making. While Warren Buffett may not believe in gold, many others quietly do. In the next section, we'll talk about how gold compares to stocks, crypto, and real estate, so you can see which one truly protects your wealth. Stay with me. The comparison might surprise you. Let's compare gold to the other big players. Stocks, crypto, real estate, each one is talked about on social media. Everyone says their favorite is the best. But which one is truly safe? Let's break it down. Simply, first, stocks. Stocks are great. They help your money grow. If you buy a good company and hold it for years, it usually pays off. But here's the problem. Stocks move fast. They go up and they go down. During the 2008 crash, the US stock market dropped nearly 50%. If you needed money at that time, you were stuck. Now think about this. When the market crashes, people panic. They sell everything but gold. Gold usually goes up in those times. When people are scared, they run to safety. Gold becomes that safety. Now, crypto, Ethereum. They made some people rich. They also made many people broke. Crypto is new. It's exciting, but but it's also super risky. Prices can go up 100% in a month and drop 70% the next. It's not stable. It's not trusted by every country. Many still don't understand how it works. Can it be part of your portfolio? Sure. If you can handle the wild ride. But can it protect your money like gold?
Not yet.
Gold has been tested for thousands of years. Crypto, just over a decade. Now, real estate. Buying property can be a good move. It gives you rent. It grows over time. It's something you can touch. But here's the truth. Real estate needs big money. You need a loan, good credit, and time. So property prices can fall too, just like in 2008. And if the market crashes, you're stuck with a house you can't sell. Plus, what if interest rates go up? Your mortgage becomes more expensive. Gold doesn't have that problem. No loans, no banks, no paperwork. You can buy a small amount or a large one with ease. So what's the point here? Stocks, crypto, and real estate are all good for growth. But gold is good for protection. It's not an either-or thing. It's about balance. Imagine this. You build your wealth with stocks. Take some risk with crypto. You earn passive income with real estate. But you protect all of that with gold. Because when things go wrong, gold is your backup. It doesn't promise big gains, but it keeps you safe when the world shakes. Even central banks are buying gold now. Why? Because they know what's coming. And while Warren Buffett avoids gold, many governments, billionaires, and smart investors are quietly stacking it. The choice is yours. In the next section, I'll show you exactly how to start buying gold, even with just $10, and how to do it safely without getting scammed. This part is super practical. Stay with me, you'll thank yourself later. So, you're interested in gold, but maybe you're thinking, I don't have thousands of dollars to invest. Good news, you don't need that much. You can start with just $10. Yes, really. Let me show you how. First, there are 3 main ways to buy gold. 1. Physical gold. 2. Digital gold. 3. Gold-backed investments. Let's talk about each. In simple terms, 1. Physical gold. This is the real stuff. Gold coins, gold bars, you can hold it in your hand. It's pure. It's private. It's no internet, no app, just you and your gold. Many people like this option because it's real, but you have to be careful. Here's what to watch for. Always buy from a trusted seller, not some random guy online. Check the purity. The most common is to 4K. Think about storage. Don't just leave it in your drawer. Use a home safe or a locker. Gold coins like the American Eagle or Canadian Maple Leaf are a good place to start. But yes, physical gold costs a little more because of minting and delivery. 2. Digital gold. Now this is for people who like convenience. With just a phone or laptop, you can buy small amounts of gold, even $1 worth. Apps like One Gold, Glint Vaulted, and even some crypto platforms let you own real gold stored in a vault. You don't hold it in your hand, but it's backed by actual gold. It's easy to buy, easy to sell, and safer than keeping it under your bed. For beginners, this is a great way to start small and learn. 3. Gold-backed investments. These are like stocks of gold. You don't buy gold directly, you buy a fund that owns gold. For example, SPDR Gold Shares, ticker symbol GLD. You can buy this on stock apps like Robinhood or Fidelity. Moves with the price of gold. You don't get physical gold, but you're still investing in gold's value. This is good for people who already invest in the stock market and want to add a bit of gold to their portfolio. So, which is best? It depends on you. Want to feel the weight of gold in your hands? Go physical. Want to buy and sell easily? Go digital. Already using stock apps? Try gold ETFs. But here's the golden rule. Start small. You don't need to jump in with $5,000. Start with $20 or even $10. Learn how gold works. Watch how it moves. Understand your comfort level. Then slowly build more. Don't wait for a crash. Start preparing before things go wrong. Because once panic hits, everyone runs to gold. And prices jump fast. In the final section, I'll show you a simple plan. How to balance gold with your other investments so you don't just protect your wealth. You actually grow it safely. Let's wrap this up strong. You made it to the end. Now you're smarter than most people about gold. But here's the big question. How much gold should you actually own? Let's make it simple. You don't need to sell everything and go all in on gold. That's not smart. Gold is not a get-rich-quick trick. It's not for big gains. It's for protection, for stability. So the goal is not to bet your whole future on gold. It's to use it like a shield. Here's a simple rule that many experts follow. 5% to 15% of your total money in gold. That's it. Let's say you have $10,000 saved or invested. You could put $500 to $1,500 into gold, enough to protect you. But not so much that you miss out on growth elsewhere. Because remember, stocks grow fast. Real estate builds wealth. Crypto, if you're bold, can explode. But gold holds the line when everything else is falling. It balances your risk. It keeps your portfolio steady. It helps you sleep better at night. Let me show you what a balanced plan could look like. 60% in stocks, 20% in real estate, 10% in crypto, 10% in gold. Of course, this is just an example. You can adjust it to fit your goals. But the point is, don't ignore gold. Don't fear it. Don't think it's outdated. It's been around for thousands of years. It's outlived empires, wars, and market crashes. It will outlive crypto. It will outlive cash. And while Warren Buffett may not like gold, he doesn't need safety the way regular people do. He has billions. You and I, we need protection more than he does. Gold gives us that. So what should you do now? Simple steps. Choose your way. Physical, digital, or ETF. Start small. Even $10 builds slowly. Don't panic. Don't rush. Stay informed, and most important, think long-term. Don't chase gold for a quick flip. Use it like a seatbelt. You hope you never need it. But when the crash comes, you'll be glad it's there. If this video helped you understand gold, make sure to like, share, and subscribe. We're just getting started. More videos are coming on how to build wealth, stay safe, and grow your money the smart way. Thanks for watching. Take care of your money, and your money will take care of you.